Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and it's Friday. Friday in a bear market. And traders, I know the last few Fridays we've actually settled higher for some bizarre reason. A bunch of Fridays in a row actually. But I don't know about this one settling higher on a Friday and a bear tomorrow, because look at how it's just been getting pounded lately. You know, obviously, we've shown you a million times we had the huge head and shoulders, and then finally we broke down out of it. Now, of course, we're sitting in a spot that's very difficult because it looks like there's a lot more downside coming, but the Senate passed the bailout bill. It has to go back in front of the House, the same committee that failed to pass it last week, or Monday, I should say. So probably it won't pass. It might not. I am in the belief that a market will go where it was destined to go, no matter what type of intervention comes its way. If it's destined to go down, it will go down. If there's intervention, and I mean intervention by the bailout package, that would probably only give us a little pop first, and we'd end up going back down anyway, because there is no way only $700 billion is going to bail out the real estate, put everyone back to work, shore up the banks, and shore up the economy. I can't imagine that happening. So we have more downside coming, but anything could happen tomorrow because of people panicking, getting in and getting out, not knowing what to think about this bill being passed. But with that in mind, I still say the S&P is a seller of rallies tomorrow on Friday. This is Friday, 10/3/08, September 3rd, and S&P is a sell of rallies in my opinion. The gold is in sell rally mode lately. It is Friday. You would think flight to quality possibly could happen, but I would think if they pop the gold from time to time, you sell into those rallies and look for more downside. Technically, it's definitely looking for more downside. Dollar index and foreign currencies. Here's where tomorrow's going to get really tricky. Really tricky, traders. Thursday night through Friday's trading should be interesting in currencies. Now, I've shown you these charts that we've been putting up for you in video after video, where we talked about on 8/5. We told you there was going to be a big sell signal and currencies would crack. And then we put up charts and they did break. I brought those same charts back to you on 9/6 a month later and told you likelihood is a buy now, and they'll go up a little for a reprieve rally and then a crack would come. Well, on 9/26, a few days back, we did a video and said a crack would come, and lo and behold, the currencies cracked on the downside and the dollar rallied just like we expected. Now, boom, there's a double top in the dollar index, a double bottom in a lot of currencies, euro currency, Swiss franc, many others. I always sell double tops when I see them. But I gotta say, this dollar is in a real bull right now. So selling the double top is something I am going to have to wait until this dollar index tests that top. If it fails at it, then we'll come up with the recommendation, or I should say, then we'll put out the signal. We already have recommendations on file at the site for tomorrow for dollar index, for gold, for S&Ps. We're looking at NASDAQ as well. But until that dollar index tests that double top and fails, I don't know that I'm willing to do it. And I always sell double top. Traders, you know how my rule is, always sell double tops no matter what's going on. If you see a double top, you sell a double top. So I'm ready to jump in there and sell it. But being that currencies are in such a bear, euro currencies especially, we're expecting Europe to cut rates. That's going to push currencies even lower and dollars higher. With that in mind, I'm not willing to just take that rule this time and go with it, but we'll see what happens. Two scenarios. The double top won't work because the market's so bullish right now on dollar index, or the double top's in place because our Fed cuts interest rates. I don't expect that. I'm not saying I think they will, but maybe that's why there's a double top in dollar index for no reason at all. So with that in mind, yes, I'm willing to sell into it anyway, but not until it tests that top. With that in mind, traders, let's take you to some charts right now so I can show you what I'm talking about, and we'll discuss it when I get back. Okay, traders, you have seen these charts before, but look at the movement that's taken place since. Once again, on 8-5, we issued a sell signal, and it worked really well. On 9-6, we did another video, and we issued a buy signal, which worked really well. Then on 9-25, we issued a sell signal, and boy, oh boy, did that work really well. But keep your eye on this chart for a minute, because now we have something we need to really take into consideration. Bottom, bottom, same spot. That's a double bottom. This is Euro currency December daily bar. Now let's go look at another couple of charts here and see if we can put a little picture together. All right, traders, now we are looking at December dollar index daily bar. And what we did, of course, these same videos, these same charts, they've been working really well. And it keeps us in tune with the larger picture, which is why I keep presenting these charts to you. While these trades are happening, we might as well take advantage of them. Here again, on 8-5, we issued the buy signal and the market took off. Then on 9-6, we did another video issuing a sell signal and the markets broke. Then on 9-25, we issued this buy signal, and look at the size rally dollar index had since then. So you can see it is working well. But now look up here. Top, top, same spot. We always sell double tops. Now I want to show you another chart which should really put this in perspective for you. And I'll tell you right now, if in fact we get a test of this top and it fails, I'd say we'll end up with a couple of quick down days in the dollar. I am not turning bearish, nor am I issuing sell signals, but we may have to day trade it from the short side tomorrow. Let's see what this next chart looks like. Okay, traders, this is a very interesting chart. This is an overlay, whereas I have the dollar index in green here. This is the dollar index chart, and I've overlaid that with the euro currency chart in blue. Dollar index green, euro currency in blue. Dollar index runs up, puts in a high, euro currency puts in a low. Then dollar drops, euro currency rallies. Dollar then, after the drop, rallies back up and puts in a double top high. And euro currency breaks down and puts in a double bottom low. That is right as of now, the video that we're doing for 10-3-08. So here you can see double bottoms. Now, in a bear market, I'm not really strong on buying the double bottom, but I am much stronger on selling double tops. Double tops seem to work much better. They get up there, and lots of times you get a big break, whereas with double bottoms, sometimes it just messes around a little and continues lower. If it were only a double bottom in euro currency, I probably would ignore this. But with that double top in the dollar index, and the double bottom in euros, and the double bottom in many other currencies, we have to obviously take a look at this and possibly scalp trade by buying dips and selling rallies on a Friday, in dollar index selling rallies, and possibly buying dips in the euro currency. Let's look at one more chart now, and then we'll talk about that. Okay, traders, this is the Swiss franc December daily bar, and look, boom, boom, double bottom. Just like the euro currency, just like many other foreign currencies, and almost always you're supposed to buy double bottoms or sell double tops if you get them. Well, again, I like double tops better, and the fact that there is the big double top in dollar index, although dollar index is quite bullish and these currencies are quite bearish, you can't deny what you see here. Again, I would blindly sell into any double top, but this particular situation, I think I would like to see the dollar index test the double top before we get involved. We will see as the market develops tomorrow. Make sure you're at my site. It's www.livewithoscar.com. We will send out signals immediately if the markets meet criteria for us to get into our trades. All right, traders, now I have one more view to show you, and this will be of the S&P market. Let's look at another chart here. Okay, traders, clearly we have broken out of the huge head and shoulders formation, and now we are in some kind of a channel heading downward, and it looks like there's a lot more downside coming our way. This has been a substantial move out of that head and shoulders so far, It was somewhere above the 1225 mark when we finally broke down out of that head and shoulders. And we've gotten way down on this chart, down to probably the 1102, 1107 area since that breakdown. And it looks to me like with little rallies that need to be sold, there is more breakdown coming our way. Now again, with the bailout package, if for some reason an announcement is released that they passed the bailout package in Congress, you can get a rally, but I don't think it rallies anything more than somewhere in this area, and then it'll break back down hard anyway. You may not ever even get out of this channel right here. So we are absolutely still bearish in S&Ps as we have been ever since the top came in. I've had on my board, don't fall in love with the upside. And we've had a lot of you traders out there that still are bullish. Some of you tell us that we're crazy. But hey, I trade what I see, not what I think. And I think you bulls ought to get on the bear camp before you can't. I mean, sooner or later, your bulls will be right, but we could be hundreds of points lower by the time it happens. So I don't know how many of you are left still holding on to the scenario that we're in a bull market. But traders, we are not, and we have not been for quite some time. Do your own charts, do your own homework. Tell me if you don't agree with the assessment we've made for you. So you've seen those charts, traders. You see that double top in that dollar and that double bottom in the euro currency, Swiss franc, and many other currencies. We're going to have to trade it, right? You can't let that get away from you. So we will see how that sets up. If we get to what we like to call our sweet spot, we'll let you know immediately at the site via flash updates and, of course, in the live chat rooms where I'm on camera. So we'll tell you if, in fact, the dollar and the euro set up for a trade. We also have recommendations for the S&P, but with such volatile swings lately, I prefer to leave it out as a neutral, and when the market sets up, I'll let you know immediately when it gets there. Like we've been doing the last few days this week, we'll jump in the moment it does set up. I will say this. Don't fall in love with the upside. I've been telling you this video after video. Last video that we did, we talked about a little peck on the cheek. Remember, right? I said a little kiss on the cheek on the upside. We got long in the 40s and 50s, 1140s and 1150s, and kicked them out above 1169, somewhere around 1170, 1171. And then it turned around and dumped. That was the little kiss. We gave it a little peck and we ran. Since then, we've been selling the S&P's rallies and doing quite well. This has been a great week. So we are staying in that mode, especially on a Friday. We will sell the rallies in the S&P. We will see what the gold wants to do. I would imagine that's going to act the same. And when the euro currency / dollar index sets up, we'll let you know. Generally, in these videos, I give you exact levels where to get in and get out, or at least close levels. But today, I think it's prudent for us to keep those at bay and let the market set up and then tell you when to get in. So make sure, traders, you're in tune with the Emini page and you're in the chat rooms. If you don't know where to go, come on down to www.livewithoscar.com and jump into the chat rooms so we can help you get through these markets. Analysis traders, as you see with those charts that were just up on the board, it really works well, traders. We teach technical analysis every day, whether we hold a class or we just give you lots of tips. Every day, we instruct our Omniacs more and more on how to view these charts and how to apply that to market trading. And we will continue to do that every single day. All right, traders, make sure you're there. Give me a call anytime, day or night, 702-629-4755. And as I always ask you, continue to send in those emails. Shoot me out the emails to oscar@futuresanalysts.com. Guys, anything we need to talk about on a Friday in a bear market? You know, I am not. Last few Fridays, yes, we settled higher, and I think we traded with that in mind. But there is not one fund manager I can think of, unless, of course, the bill passes and we get a little pop, that wants to get in front of that boss tomorrow and go, "It's Friday, buddy, and I loaded up with all the stocks in the market." Nobody wants to do that tomorrow. Look at how pounded this market has been. Profit taking or not, there will be no new buying tomorrow on a Friday in a bear market, barring the government passing that package. And again, you know how I feel about that. In fact, traders, let me just say this. For weeks on end, I've been telling my site, I thought that package would never get passed. I thought that they were issuing the package so they could say, okay, everybody, calm down. We've put together a package. We're the Treasury, we're the Fed. We have a package that will help everybody. Then they'll give it to Congress. Sometime will pass. Congress won't pass it. And what happened? Markets have already calmed down by that point. That was my theory all along on that package. Then on Sunday night into Monday, you had Pelosi and Frank come out and basically say, don't worry, we got the package. Both sides agreed. All we need is Congress's votes. And then Congress votes it down. So the only thing that I did was on Monday, I assumed that this thing has to pass, even though my viewpoint was that they would never do it. And lo and behold, it didn't pass anyway. So let me tell you something, traders. Sticking to your guns is always the way to trade these markets. Because admittedly, on Monday, I tried to get long right before the vote, and we got stopped out. Luckily, that was our only loss. We stayed out after that, and Tuesday we took that money right back, plus more. But instead of trading what I seen in the charts were bearish. The fundamentals, of course, you knew that the package may pass, but I always trade what the charts say. Lo and behold, on Monday, I actually traded against the analysis. I traded the fundamental, and what happened? I got slapped for it. I never, ever will do that again. I don't care what the fundamentals are, and that's basically the same situation we are in right now with the dollar index. The chart says double top, you got to short it. However, usually when double top setup indicators are in the sell rally mode at that point, indicators are not quite there in dollar index. So technically, it's a little more challenging, but I will trade the technical. I don't care who's doing what with interest rates or what happens. I will trade the technical move as long as it proves itself to me. All right, traders, don't forget, say this to yourselves every morning, afternoon, every evening, and you know what that is because it'll help keep the emotions out of trading, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.